Hello and welcome to MF Corner. I'm Sumaira Abadi. Before we start talking about mutual funds, here's something we all enjoy. That's a good quiz. And what's better than the CNBC TV 18 year-end market quiz? Mangalam is standing by with the fourth answer and the fifth and last question for the day. Mangalam.
Hey, the questions aren't over yet, and neither are the presents, neither are the chances for you to win these presents. It's CNBC TV 18's year-ender market quiz. Let's bring out the next question for this hour. Before we do that, let's give you the answer of the previous question. The previous question was, which of these companies was incorporated more than 10 years ago? Well, the answer that you have is flashing for you. The options that you had were these four, and the answer was L&T Finance Holdings. All these other babies are less than 10 years ago. If you got L&T Finance Holdings, you get a chance to win. If you did not, then well, there is another chance for you, and this is our next question. The next question for the CNBC TV 18 market quiz is, which company does global investor Oppenheimer not have more than 1% stake in? Is it DLF? Is it Kotak Mahindra Bank? Is it Fortis Healthcare? Or do you think it is Z Entertainment? These are your options. Which of these companies does Oppenheimer not have more than 1% stake in? Give us your answers on CNBC TV 18's Twitter page. Post them as a comment on @CNBC TV 18 News. Do not forget to use the hashtag CNBC TV 18 Market Quiz and win exciting prizes through the day, through the hour. I'll see you the next hour.
All right, Mangalam, thanks very much. So guys, don't forget to send in your answers. And now on to our more important question. And this one, really is in the quiz variety. It's more the debate variety. Should you vote yes or no at the Franklin eVote this weekend? Now, remember, on the 3rd of December, the Supreme Court had mandated that Franklin Templeton hold an eVote so that unit holders get an opportunity to have their say whether the 6 schemes should be wound up or not. So means that should they be closed or should they now be reopened? The date for this vote has been set between the 26th to the 28th of December. And champions of both the yes and the no vote have been very vocal, very passionate on all platforms. So I thought we should get you some decisive opinion from two well-respected voices. So joining me today, Feroze Azeez, Deputy CEO of Anand Rathi Private Wealth Management, and Amit Biwalkar, Director of Sapient Wealth Advisors. Gentlemen, good afternoon to both of you. Amit, let me come to you first. Yes or no? Which way are you swinging and why?
Most importantly, Sumaira, the thing is that Hathi chala gaya, pooch baki hai. I think the investors have waited for the last 8-9 months with bated breath, and finally the court has given some ray of hope to them. Clearly on the lower end, which is the ultra short term and the low duration, I think the fund has been able to collect some cash. So if you vote yes, then there will be probably an orderly winding up of the schemes, and I think the court will allow them to disburse the cash which is already sitting in the portfolios. So definitely from my end, I think you should vote yes on the orderly winding up of the schemes.
But Amit, is that a yes you mean for investors of all 6 schemes, or only the 4 which have cash available for distribution? Because as of now, the short-term income plan and the income opportunities fund are still, they have outstanding borrowing. So what's the advice for investors in those 2 funds?
So I will say probably you need to vote yes for all, for a simple reason that if you look at the maturity profiles which have been circulated by the asset management company, they have been of the view that by April you will see none of the schemes which will go into borrowings but will have surplus cash with them, including the short term, which has a 1% borrowing today. And I think all of these schemes, as and when they will generate cash because of maturity or because of coupon payments, these guys will be able to give it out to the unit holders. If you say no to any of the schemes, probably the redemptions will happen on a first come first serve basis, and therefore no pro rata distribution of the maturity amounts or of the interest will be done to the unit holders. So for me, all the schemes you need to vote a yes.
Okay, Feroze, which side are you on? I still remember, what I think 2-3 weeks before the winding up was announced, we were discussing this and the rising redemptions in Franklin, and how many months it's been since then. It's the end of the year. The vote is finally here. Should investors go with yes or no?
I think, like Amit said, yes is a more rational option for all schemes. And I think that's what will help people realize the maximum value of the investment they've made, especially in a fallen interest rate situation. The interest which these bonds which are there carry is reasonably high. So if you allow the fund to wind down in a gradual fashion, the interest accrual could be almost twice as more than another fund. Another credit risk fund, when compared to another credit risk fund, you have a 2-3% extra in terms of coupon accruals or interest accruals. So I would say definitely a yes to all schemes, more so for those schemes which have lesser amount of cash.
Okay, so Feroze, my next question to you is also this. Why yes for those schemes which have less cash? Because some schemes don't have cash at all. Feroze, can you hear me?
Sumira,
Yeah.
I think, yeah, I can. So if the schemes have lesser amount of cash, that implies that on day one, if you say a no and everyone says a no, and if the scheme opens up, it's obvious that all of them or most of them would send redemption in the first couple of days. So all these bonds will have to be sold. Of course, things are far better than they were in the month of March and April, but the price you would be able to realize as a liquidator for these bonds would at least be 10 to 15% lower than the actual value realizable if sold in due course of time.
Okay, the other thing we want to also discuss a little bit is the practical aspects of this vote. So Amit, let me come to you first, because I understand that not every unit holder will manage logging in. I mean, it's not just getting through the door first in case there's a redemption, but also getting through the door first for the vote. But it doesn't matter, right? Because it's spread over 3 days.
Yeah, I think on email you can vote in for 3 days, but you also have an option on the 29th of December, when you will have the AGMs of each of these schemes on the 29th and 30th. I think if you can't do it on the email earlier, up to 2,000 investors per AGM, you can also vote during the AGM of that particular scheme on those 2 days. So if you are probably on the 26th to 20th partying somewhere, then probably on the 29th and 30th, when there will be AGMs of these 6 schemes, probably you can log in then, and you can also vote at that time during that AGM. Only thing is you need to register yourself prior to starting off an AGM. I think that is more important, and that's only for 2,000 investors per scheme per AGM on that day.
Okay, and Feroze, one investor, one vote, is that significant? I mean, if I'm holding a large chunk, shouldn't investor holding several thousand units or several hundred units have a bigger say? I mean, that person has more at stake.
Yes, Sumera, I would say that weighted average voting with respect to the assets which a person has in the scheme is something which is critical. Now, of course, one person, one vote, one pan, one vote kind of a strategy seems fair and unfair both. But I think what is the biggest anomaly, which I'm not particularly pleased with, is if a person had provided his or her units to a margin account, then all the unit holders are getting only one vote, and that's the broker whom the margin has been provided to, which I think is not fair. Now, for example, if there are 20 clients who have submitted their Franklin units to the broker, who had, way back on 23rd of April 2020, submitted their units to the broker for margin purposes, now all of them have only one vote. And that vote is being casted by the broker, which I think is an anomaly from a practical standpoint if we are now discussing tradeware.
Absolutely. You know what? We're going to take a break. We come back in just a bit. We'll talk about, now the assumption is that we're going with the yes vote as the most probable scenario. And assuming that, what happens, after the yes vote? How are things going to progress from here? How soon can you get your money back? All of that is lined up next. Stay tuned. Welcome back. The Franklin Templeton eVote is scheduled for 3 days from the 26th of December. That starts this weekend. So we're touching base with Feroze Azeez of Anand Rathi Private Wealth Management and Amit Bivalkar of Sapient Wealth Advisors to talk about how investors should vote. So we've already discussed a little bit about how the vote should progress. And, it's not just the opinion today, but over the last many days, everybody I've spoken to, goes with the opinion that the yes vote is more beneficial for every investor in every scheme. Okay, so now let's take it forward. Feroze, if the assumption is that it goes through with the yes vote, how do things progress from here?
See, I think once it goes through a yes vote, of course, the cash which each of these schemes have will get paid out in about a month's time. Why? Because there'll be a second round of voting, which will happen, which will help the investors decide who the liquidator should be. Should it be the trustees or it should be Deloitte? One of these two as liquidators will be appointed. So this second round of voting should consume another 10, 12 days. And then once that scheme opens up, the cash which has got accumulated in the scheme will get paid out immediately, which is good news for 3 to 4 schemes. The other 2 schemes which have no cash component will not get immediate relief in terms of some outflow. And the rest of the bonds will have to wait till maturity or the liquidator of the secondary market. So to answer your pointed question, Sumira, I would assume that most 80%, 70 to 80% of the money would come a year from the time when the unwinding begins to happen.
Amit, Feroze, Amit, both of you are very, very active on social media, so you'd know some of the questions that people are asking. And one big doubt or concern that remains is that, this money will not come back to us, So there is some amount of mistrust that has been created. Amit, is that a possibility at all, that money will not return, or that the haircuts, perhaps in 1 or 2 of the schemes which are cash positive and, of course, the ones which are not, will be very, very severe for investors?
I don't agree with that view. I think if you have held on for the last 8-9 months and you have seen the maturities, the simple thing to look at is your NAVs are up from the day they wound up. So 23rd April was the day when they wound up. Your NAVs are up from where they were. So obviously there is some accrual and there is some cash component which is coming into the scheme. Most of the Twitterati also said that below 2 lakhs, it is better to say a no, because then they will get money earlier. This is a myth. Everybody will get pro rata. And if you put a yes, I think you will get your money faster, because there will be no hurry to have a distress sell in any of the schemes. I will urge all the investors to look at the maturity profiles and the amounts which have been given by Franklin Templeton on their emails. All the account holders have been given that in the email, and also watch on the e-voting process what the President Templeton, Franklin Templeton Sanjay Sapre had to say. I don't think so that you will get a larger haircut if you vote a yes. But if you vote a no, definitely there will be a larger haircut, because then everybody will rush in for redemptions and you will have to sell whatever you have in the portfolio in the market as on that day. I think that will be a bad scenario for investor, and therefore one should vote yes for all the 6 schemes.
So if the, I don't presume to second guess what the Apex Court the reason why they asked for this vote. But how is it in terms of a precedent now? Because, if the collective opinion is that a yes vote is more beneficial for every kind of investor, Feroze, what does this mean for a precedent? I mean, in future, if a scheme faces the same fate, unit holders will have the chance to vote, may not go through with a yes at that time. I mean, how do all of these actions add up for the future of the mutual fund industry?
Sumira, I don't think it has a large impact on the rest of the schemes. Why? Because this is a credit risk fund, and credit risk fund with maturities of bonds of 5 years and 7 years as well. So the point is that other schemes would not get impacted with this kind of a precedence, and it is not going to be extrapolated as a no as a choice for all schemes. See, today, if there's an NAV which is greater than 23rd April, which Amit said, NAVs have an assumption that you should be able to liquidate those assets on that particular day at that particular price. If you're not able to do that, then the NAV's computation itself is in question. But having said which, here we are speaking of illiquid, lower rated papers, which may not be sold in one particular shot, because redemptions will come at one shot for sure. So point is that if this were to happen in the future, for schemes which don't have the similar illiquidity problem, the answer could either be yes or a no subsequently. But here, since the bonds are illiquid, and some of them are actually 5 and 7 year maturity, you may have haircuts of 15-20% if you go to sell that on a given particular day. But even if there are 4-5 months, I think these are liquidatable instruments. So if there is a no and redemption happens in 3 days of almost all the money, then there is a 20% haircut to be looked at. So other schemes will not face the same problem, is my belief.
Okay. Amit, anything else that investors or unit holders need to look out for? Any advice for them?
I think this precedence on the unit holders' consent, I think no other scheme in the mutual fund industry will go for a wind-up without the unit holders' consent now. So the power of trustees, which the asset management company has, I think that has been diluted for quite a bit. And I think no other scheme now will first go for winding and then go for unit holders approval. It has to be first unit holders approval and then winding up. I would like to say that thinking well to be wise, planning well wiser, but I think doing well wishes and best of all. I think so you don't need to look back, you need to look forward and enable your future by probably looking at a yes vote on the Franklin episode.
Okay, you raised an important point, Amit, and let me wind up on that, the power of the trustees is probably going to be diluted henceforth. Therefore, in the second vote, which will be on deciding who's going to do the final winding up or the liquidation, what would your recommendation be? We know one is trustees, one is with Kotak, one is with Deloitte. So what would you recommend clients?
I don't think so. One has to pick any one of those because I think the NAV and the valuation is the agency which is outside the AMC. I think the bonds are valued according to the matrix, and whatever you sell in the market, that's a market price. So whosoever be the liquidator, I think you will get a fair value, whatever is quoted in the market or the valuation which the matrix gives.
Okay, Feroze,
same question to you.
I think for illiquid bonds, a certain degree of experience to liquidate them will be needed, in my opinion, and some degree of negotiation with the issuer itself. If you are able to give back the bond at a specific haircut, the good issuers who are anyways going to repay may want to take that benefit. So I personally think the trustees are best equipped because they have managed that portfolio for 10, 12, 14 years very well. Of course, so I would vote for the trustee because there's no question of intent, in my opinion. So an experience and an issuer contact to be able to not just sell in the secondary market, but to offer these back to an issuer entity will require some degree of experience of having managed an illiquid credit portfolio.
Okay, but we'll come to that bridge, we'll cross that bridge when we come to it later on. For the moment, Feroze, Amit, thanks very much for joining in and for advising our viewers. And viewers, I want to just caution you that, these are recommendations, suggestions. Please check with your own, personal finance expert who's been guiding you. Do your own research and then cast a vote. Don't just blindly go with what everybody's saying, but we're just trying to put all the opinions on the table. And all I can say right now is that, there's nobody who has said go with a no, but I will still encourage you to do your own research. We'll wind down on MF Corner. Do stay tuned. The team of Closing Bell joins you next.